Hello, retired and aspiring to retire early community. If you're a dividend investor looking for a steady income with a sprinkle of diversification, then you're going to love today's video. We're diving into the PBDC ETF, a high yield dividend fund that's currently paying a juicy 10% dividend. I've been loving this ETF in my portfolio, and I just got paid $2,373.30 in dividends from PBDC without lifting a single finger. Perfect for covering my bills in retirement. Stick around as we break down what makes PBDC an absolute standout star, its performance, and why I think it's one of the best dividend ETFs out there. If you're new here, my name is Adam, and I retired in 2024 at the age of 41 years old. My retirement is built on a unique three-part approach. The first part is the multi-bagger for asset accumulation and asset appreciation. Number two, we got the dividend machine for high yield, consistent distributions to cover your bills. And number three, we have the options income strategy to accelerate passive income with covered calls and cash secured puts to fund your retirement in style. What I'm not is a financial advisor, and this is not advice, just me sharing how I handle real trades with real money, full transparency, no fluff, no BS. PBDC fits perfectly into my second pillar, dividends for steady cash. So let's talk about this ETF is all about. The Franklin Templeton Business Development Company's ETF, ticker symbol PBDC, was launched in September 29, 2022 by a well-known Franklin Templeton. This fund is all about generating current income, which aligns with my goal of steady cash flow in retirement. PBDC is a quarterly payer, not a monthly payer like I'm usually talking about on this channel, delivering a very solid 10% dividend yield right now, with payments ranging somewhere between 72 cents and 91 cents per share. That consistency is absolutely huge for me, even when the markets are in the red or choppy up and down like we have right now. Those dividends keep coming, helping me pay my bills. The fund holds a total of 23 different business development companies, or PBDCs, out of the 48 publicly traded ones on the market. And the top 10 of their 23 or so holdings make up around 70 to 75% of their portfolio, with total net assets of $186 million. Now, that's not astronomical, but that's a respectable size for this type of ETF. The management fee is currently 0.75%, which I'm okay with for the active management that you're getting. And I'll make a comparison to another ETF in this sector later on, and you'll see why PBDC management fee is well worth it. Now let's talk a little bit about BDCs, which is the underlying asset investment for PBDC. A BDC is called a business development company. These are specialized investment vehicles that act like a bank for small and mid-sized businesses. If you want to call it small and mid-sized, they're often privately held companies with revenues up between $10 and $500 million. These businesses, like startups, scale up, are often underserved by traditional banks, and BDCs step in to provide financing. BDCs offer loans, often with floating interest rates, which is great in a rising rate environment. They can also take equity stakes in these companies, giving them potential upside if the company grows or goes public, which is good in a lowering rate environment. It's a hybrid of lending and private equity, which fits nicely with my multi-bagger pillar. That's real growth potential right here. The BDCs are perfect for my dividend pillar because they are required to distribute 90% of their taxable income as dividends to shareholders. That's often between 8 to 12% for the BDC cumulative dividends. And this is why PBDC ETF is paying you that juicy 10% dividends. They also add a layer of diversification to my portfolio with low correlation to any other asset classes that I'm invested in, and that's key to preserving your wealth. So how does PBDC use BDCs. ETF itself does not use direct leverage, no borrowing funds or derivative, which I appreciate since I already take on massive risks with my option strategy. But the BDCs that they invest in do use leverage. They can borrow up to a 2-to-1 debt to equity ratio, though most operate with a lower ratio, something like a 1-to-1 or lower debt ratio. The leverage boosts their lending capacity, amplifying the returns from interest income, but it also increases the risks of those small businesses defaulting. PBDC's portfolio managers have over 20 years of experience in small cap value stocks and 15 years specifically in BDCs, which give me confidence that they can manage these risks while delivering the income that I need. Let's talk about performance because PBDC really shines for my dividend pillar. I've got a chart here from Seeking Alpha showing PBDC's price return compared to the S&P 500 ticker symbol SPY. I'm about to give you some comparison numbers which were taken over the weekend on Sunday the 20th, so please keep that in mind. I know this was a very busy week. Since inception about 2.5 years ago, SPY is up 45%, while PBDC is up 24%. So while the SPY might win on price return, PBDC closes the gap and even beats it when you factor in total returns thanks to its consistent 10% yield. For 2025, year to date, both are down 5.2%. Over the past year, SPY is down 10.2%, while PBDC is only down 9.5%. Factor in that 10% dividend, and PBDC is actually coming out ahead on both timeframes. Those dividends keep my cash flow steady while I hunt for multibaggers and run my options play. PBDC is perfect to diversify your portfolio and offer you some downside risk, especially if you're concentrated on things like SPY, QQQ, and other main street ETFs. Compare that to BizD, which is the other competitor in the BDC space. It's BIZD ETF. Since PBDC's inception, BizD is only up 11.5%, while PBDC is up 24%. BizD only offers an 11% dividend with just north of PBDC's 10% dividends. So PBDC's total return is better thanks to its fantastic active management, which is why I'm okay with paying that 0.75% management fee. So why does PBDC fit so well into my retirement strategy? First, it nails my dividend pillar, that 10% yield and steady quarterly payments. $2,373 just last quarter gives me a passive income that I need to cover my bills. Now, I usually prefer ETFs that pay monthly and have tax advantages like QQQI. I made a video about that. Click on top. SPY I made a video about that. Click on top. Or IWMI. I also made a video about that. Click on top. If you missed any of these, finish watching them and come right back to this channel. Now, all three of those ETFs are actually products by NEOS, which I love. Those are monthly payers, and they give me more frequent cash flow to reinvest or use for expenses, which is great for my option strategy like cash secured puts. But PBDC's quarterly consistency is hard to beat. Unlike some monthly payers that can have more volatile distributions, not saying those NEOS products have, I'm just giving you a comparison, PBDC's payments have stayed steady between 72 cents and 91 cents per share, which gives me confidence in my cash flow planning. Plus, its 10% yield is competitive with those monthly pairs, and I love the diversification that it brings. The main reason why I am invested in PBDC is the diversification layer because it's unlike any other investment vehicle that we usually invest in. BDCs give me exposure to small and mid-sized businesses in industries like tech, healthcare, and many others, areas where I wouldn't touch with my multi-bagger growth stocks. There's also upside potential for those equity stake BDCs hold. if they're investing into these companies then end up selling off their shares or they make a big hit. The BDCs that are invested in those companies take a share of the company and a share of the profit, which would complement my growth plays. PBDCs gives me a stable base to work from while I chase my multi-baggers and boost my income with options. I'm not sure if it's good for your portfolio. Let me know in the comments down below if you heard about this ETF before, or maybe you are invested in this ETF. Maybe you can bring some insight from me and the audience above and beyond what this video is giving you. PBDC isn't perfect. BDCs lend to smaller companies and can have higher default rates, which could hurt returns. And while PBDCs don't use leverage itself, the BDCs it invests in do, which can amplify losses in a downturn. But with a seasoned portfolio manager and a diversified portfolio of 23 BDCs, I think PBDC manages those risks really well, enough for my needs. Also, we have been having an extremely choppy year. And so far, so good with PBDC. So, is PBDC right for you? If you're an income-focused investor who loves dividends, wants diversification, isn't afraid of a little bit of risk for a 10% yield, I think PBDC is a fantastic choice. For me, it's a key part of my dividend pillar, giving me steady cash flow while I chase multi-baggers and boost my income with options. And as I mentioned before, it's not the only BDC ETF out there, but in my opinion, it's the best game in town, outperforming both the S&P 500 and competitors like BizD when you factor in those dividends. I know you love this video, but I've got something even juicier. So click on this video of AMLP ETF, a midstream powerhouse energy ETF paying a tax-efficient 8% dividend. Thanks for watching and enjoy your weekend. Peace.